Hey guys, welcome back. In today's video, we are talking about the AMC golden value, how shorts continue to lose liquidity, the institutions continue to accumulate, and many more in this video. First, we take a look at this. Why do they own a dead stock? So one of the things we've been looking at is the institutional ownership for AMC because it shows us multiple things. Firstly, we can see at the top already with Vanguard and BlackRock, who already own a combined of over 16%. Now, we've known from this already is that knowing how much retail has been buying up AMC, knowing that retail ownership is anywhere between 90 to 95%, we are already seeing the existence of synthetic shares that exist there. But still, the fact that there are synthetic shares of AMC and institutions still continues to buy, that is already a bullish signal. But there are multiple other things that we have to understand as well. Firstly, like we've already said, there have been short sellers of AMC and/or institutions that help support short sellers who have bought into AMC. Firstly, we take a look at Goldman Sachs. What we've seen in the past is how Goldman Sachs had short positions of AMC and put positions of AMC. But what we have seen them do recently is they got rid of all the short positions and bought into longs and calls for AMC. Next, we have Bank of America with 1.6. Then the reason why I mentioned B of A is because they are the prime lender towards firms like Citadel, who obviously has a large short position against AMC. So whilst Bank of America are trying to finance Citadel, they've realized how big of a risk it is, and you can see that they are buying into AMC as well. And so from all of this, we can already understand is that the consensus on AMC is that the overall institutions, the overall these big firms, they see the potential of AMC, and only a small portion of these institutions have shorted AMC. And the reason why they're not trying to cover is because they realize they can't, and they have created too much synthetics for them to cover. And so this is how we realize that all institutions realize the potential for AMC. Another big thing is some people may mention is, of course, the fact that we're seeing people like Vanguard and BlackRock buy into AMC. Now, some people are saying that's because they buy into AMC to loan out stocks. Now, of course, this is bad in the sense that they are allowing short sellers to locate more shares. But if you look at it from another angle, it's about understanding the fact if they are buying these shares because they know there's a demand for these shares that they need to locate, then it just shows how much the shorts want AMC shares and that they want other institutions to buy it so that they can borrow it from them. And so all in all, from institutional ownership, we can see so many things which is showcasing how shorts are in need of shares, how shorts are trapped in AMC shorts, and that everyone realizes the potential there is for AMC. And you can see there are other factors as well. We know about the AMC's fundamentals, but you can even see here, wow, so far this quarter, Highcroft has added around 15 million to AMC's holdings when counting both shares and warrants. And so what we've seen is how AMC's investments are obviously paying off. Now, this is something that I want to relate to with the AMC issuing of shares in terms of raising money. Like we've said, when AMC has the ability to raise money, a lot of people are worried about dilution, but then completely ignoring the fact that they are able to raise money, which allow them to do other things, is still extremely beneficial. Now, this isn't to say that you shouldn't look at the dilution, but this is to rather say that you should consider both angles, both factors in mind. Yes, there's dilution with the issuance of shares, but the fact that if AMC is able to raise money, they are able to pay off debt, they are able to improve their current infrastructure, and if they are able to make investments, you can only imagine if AMC had more cash and were able to make a bigger investment, how much this investment could have made them. And so that's the benefit of how AMC is obviously, gonna have if they are able to raise the money. Now, another big thing, reminder, this is institutional ownership. So one of the things we talked about earlier was why we've said that despite the fact, we're seeing all of these ownership, we know that a lot of these are synthetic shares. The reason why I say that is because we've never yet seen, what ownership actually is for AMC. We've never seen a full data that is accurate because different platforms are showing different data, and we've known the synthetics. But in this case, what we do know is that AMC is still retail owned. The reason why I say this is because if you take a look at Cinemark, you can see a difference in terms of, firstly, Cinemark is a company we've shown that has shown 120% institutional ownership. So 120%. So already we know from that there is something going on there. But secondly, it's about the fact that Cinemark is obviously then an institutional owned company. And that's why we're seeing, despite the fact AMC and Cinemark are both within the same industry, both experiencing the same things, whatever Cinemark benefits, AMC will also benefit from, we're seeing different price movement. Yes, there's difference in earnings. However, the biggest difference is the fact that Cinemark is institutional owned and AMC is retail owned, because we've seen the potential of AMC. We've seen the improvements of AMC, more importantly, and yet we're not seeing the same movements. And from there, you can understand why we've said AMC is retail owned, while Cinemark is institutional owned, and that's why there's a disparity in the price movement. You can also see here, yes, AMC is totally dead. That's why it's still trading 70 to 80% off exchange every single day, because nothing says nobody's paying attention like a massive off exchange volume. And so if you ever want to realize, if you ever want a indicators to show you, are the shorts still trapped? Are the shorts still worried about the price increase of AMC? You should take a look at the dark pool. We've already said this, and I'm going to say it again. Dark pool is taking away the bullishness from AMC, because not only is the dark pool at 70 to 80%, but if you take a look at the majority of the trade in the dark pool, they are all buy orders. They are orders which will normally increase the price of AMC, but doesn't, because they are rooted in the dark pool. And we've always said that is the biggest indications for why we understand that AMC is supposed to be, seeing bullish movements, but not able to because of dark pool. And now we see, amidst of all of this, amidst of everything that's going on, we're seeing how the market is red today. We're also seeing how the banks and institutions are stressed out. You can see bank continues to use the Fed standing repo facility to get liquidity. The shutdown just ended, and liquidity stress in the system should fade soon. If it doesn't, and this use of Fed repo continues, at least one bank authorized to borrow from the Fed has issues on its own. One of the things we've been paying close attention to has been the repo and the reverse repo, which you can also see here, 3.7 billion. Now, the reason why we take a look at this is because we've realized that right now there is a liquidity problem. Banks are facing a liquidity problem, hence why they continuously need to borrow money. We've already seen what's happening with UBS. We're going to continue to see with other banks. Just like Darry has mentioned, if we continue to see this happening, then it means that right now there is one bank that is facing extreme difficulties, and we could be watching that bank blow up. But not only that, it's the fact that these banks who are lending out to these institutions, like we've seen in the past, how these institutions are able to borrow money, they are also facing problems. What could be the biggest things is that whilst these banks have obviously extremely large derivative positions, it could be the fact that they've continuously lend out money towards these institutions who are then still over leveraged, who are overexposed, and the only way for them to not blow up is to continue borrow money from banks, and that's why banks do this. And yet it's caused a massive problem. And so we've already said how this is obviously a countdown. As we're seeing more money is borrowed and being dumped into these synthetic shares, into these short positions, it will come to a point where the regulations will see that it is no longer safe to lend out money to these banks, who they also want to lend it out to these institutions, because it's all going to waste, and eventually it's all going to blow up, and they will never see that money again, because the retail will have it at that point from the squeeze. Another big thing, maybe this is controversial, but after AMC has traded its entire float twice over in the last months, it seems unreasonable that 600,000 shares in a 500 million share float should move the price down 3% back towards all-time low at open. Control the order flow, control the price. And so one of the things we have to realize is that these things that are currently happening in the market is obviously not normal. And it's why we've said earlier with the fact that we are seeing trading of 70 to 80% off exchange. Because how are we seeing the fact that when retail continues to buy, not only that institutionals continues to buy, how are we seeing that a mere 600,000 shares to obviously move the price? And so this is obviously a mixture of other things. Now, the main thing is why we said earlier, going back to the dark pool, is because these orders are allowed to hit the lit exchange, whereas the buyer orders aren't. What you'll tend to see that are hitting the lit exchange are sell orders, and that's why we're seeing the price moving down along with it. And then you can see from there is why we talked about this market clearly isn't fair. why we've said that the shorts continues to dump money and get in their positions trapped because of obviously what's going on here. And so you have to truly understand what we say when we said that there are hundreds of billions, if not trillions of dollars being dumped into this. And eventually it will all blow up and that money will be transferred to the retail. As always, now this is financial advice, so do take advice like a grain of salt. Make sure to do your own due diligence and research, and I'll catch you guys next time.